Good morning. I apologize right away. My belt doesn't match my shoe color. Gross negligence. Good morning, everybody. Happy Monday. You guys ready? You guys fired up? It's a Monday. Yeah? Let's go. Okay. I have granola stuck in my throat. Anyways, good morning. Welcome to Forex.Today. Let me remind you that trading is risky and not appropriate for everyone. Your past performance, good or bad, may not be indicative of future results. Therefore, always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Guten Morgen, my name is Wayne McDonald. Today's webinar is sponsored by Tom Ford. I'll be paying for these. I'm like, can I make payments on these classes? So I hope you like them. 27 monthly payments, I will own them outright. I had to mortgage my house. Why are they so expensive? I don't know. Anyways, hey, good morning. Hey, it's a Monday. I haven't slept very much. I was up when the market opened, of course. I made some trades, and then I was up at 3 o'clock in the morning when London was opening, and here we are now. So it's Monday. It's 8 o'clock in the morning, and I'm exhausted. So I might ramble a little bit today. But anyways, thank you for being here. Thank you for being a subscriber of Forex.Today. Thank you for all the positive energy and effort that you put into this community, being a big part of it, doing things like posting good questions, interacting with others and helping others, having a positive spirit and a positive energy, for clicking the like button to show YouTube this is quality content, for leaving comments to document what you learned. So you leave a comment under a recording of a video to say, in this video you learned something specific. Therefore, you can search for that comment that you left on YouTube and be able to find the information. So there's a lot that's going on here, and those are ways to participate. Thank you. Also, if you want access to my book, if you want access to my chart templates, if you want access to my training courses, if you want access to my live trading groups and mentorships, yeah, all those links are in the description below. And if you need a trustworthy broker, one that's earned my loyalty and respect, I would recommend tradersway.com. The link is also in the description below. You click on it, you open up a demo account, boom, you're in your back office, download MT4 or MT5, play some trades. The execution speed is fast, the spreads are narrow, the swaps are big, and maybe, just maybe, they'll earn your loyalty and respect. And when you're ready to trade real money, you already have an execution partner for your brand new successful Forex trading business. Tradersway.com, tradersway.com. By the way, here's my Traders Way MT4. Many people are going with MT5 now. I'm just old school. It's what most ex-supermodels use is MT4. How's the sound, by the way? Is it humming? Is that humming static around? I've been getting feedback lately about some static, and I currently what I did so far is I was able to change my microphone stand. It is buzzing. Okay, so I've changed the stand just because I know the old stand was this one. And it's old school, and I thought maybe these springs were causing some noise, vibration, and going through, but no. So what I did is I already bought a new microphone, so we'll see, but it takes 10 days to ship from San Diego for some reason. Okay. So anyways, I'm doing what I can. I thought something was off. Sorry about that. Cool. All right. So I don't, yeah, it is, but it is buzzing, huh? Interesting. Oh, Cameron's in San Diego? Awesome. Muy bien. I think there might also be, anyway, so I'll deal with that. We'll figure it out. We'll figure it out. So thank you for your patience. I'm doing things. The cool thing is this company in San Diego, they make like 3 and 4 and 5, all the way up to like $10,000 microphones for the music industry in Los Angeles. And so they make these very, 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 very high-end microphones. And they just started a new business to offer high-end blog-style microphones for, not for $5,000, right? And he says, look, it's the same people, it's the same machine, it's the same mentality going into these microphones, but they're several $100s, not several $1,000s. But this is a great, beautifully created microphone. And I thought, you know what, that makes sense. Same machine, same people, different target audience. So I'm like, cool. It's good enough for Coldplay. It's good enough for me. So anyways, cool. Intermittent, that's the weird part. But other than that, is my voice clear? Because notice the microphone isn't in my mouth. Oh, so volume is low? Okay, let's adjust that. Because I had to change things by adding the microphone arm. Okay, very clear. Lots of buzzing. So it's hard. Some people say clear, some people say it right. Yeah, I'll just speak over it. Well, like I said, I ordered stuff, so I don't know if... Okay. Yeah, but more buzzing. You're right, because it's somewhat related. I don't think I could change anything. There's not much I can do. All right. Cool. So let's move on with it. Asia Pacific still kind of hurt from the, the press calls the meetings last week between China and the United States as failed. I think it's just signaling in the opening of a new game. Right? So it's just game theory, the way I look at it. So there wasn't, the game hasn't even started. They're just signaling on how they want to play the game. And that, if you're able to signal, then that is a success, because you want to be able to signal to the other player. Okay, so in that case, that's been successful, but because you know, because of, I don't know, let's say the situation and the macro situation is Asia Pacific is not happy. So Aussie down, Kiwi down, yen up. It's the same thing. Bad news, bad news, bad news. Yen up is bad news for Japan. Okay, and Aussie down is bad news for Australia. So it's funny how funding currencies are the opposite. So up is bad, down is good. Down is bad, up is good for non-funding currencies. The funding currencies, I consider funding currencies are yen, Swissy, and dollar. Okay. By the way, has the buzzing gone away just in the last minute? So Swissy strong, dollar weak, but was strong, and yen was strong, but now weak. No? Okay, so it's not that. All right, sorry. I thought it might be this thing. No. No, worse. Okay. It's got worse. I don't know what it could be. Well, hopefully the newer microphone is shielded. Constant cycle, on and off, on and off. Wonder what it'd be. Yeah. Now it's good. Okay, so I've isolated it is my speaker. So it's it must not be shielded. Huh. All right, well we figured out what it was. So I bought a $500 microphone for no reason. Well, it'll be here next week. Okay, so that's interesting. It was this. I thought we tested that here. I unplugged it and I moved it, but maybe it was still on. It's okay. Subwoofer. Fantastic speaker. Really, JBL has really earned my respect. Yeah. All right. Cool. So now I can go back to screaming. Good. All right. Cool. La di da di da. So let's move on. How many people? Oh. Now, okay, it isn't the speaker. How amazing is that? So that was a coincidence. All right, whatever. How many people here did their swing trades on Sunday? Yep, you did your job? Good. Congratulations. You're at least above mediocrity. If you didn't, you're not even mediocrity. You're definitely below average, maybe on the left fat tail of El Suco, as they say in Peru. You have to do your job. If you can't do your job, you're going to have difficulty succeeding, and definitely difficulty outperforming. Okay. So let's go through the world. First of all, I have to start with exotics. Did you guys follow Turkey? Let me show you. Erdogan, the nutcase that he is, fired his central banker again, and did a bunch of other things. Pulled out of some treaties. Refuses to raise interest rates. So that idiot now has not only driven Turkey into the ground, but into the Stone Ages. So we could take a look at like USD lira. Check that out, huh? Look at this gap. We went from 7 to 8.5 in right at the open. This is bad for Turkey. Very, very, very bad for Turkey. And essentially, it's at the all-time low. We can't trade it, but it's still there. I mean, you still have to know it. So what this does is it impacts other exotic currencies or emerging market or frontier market, whatever you consider it, whatever label you give it. So you get something like, that's all crypto. Where's my peso? Where's my peso at? There, way up here. So it impacts that. So let me kind of zoom in now. And we gapped from down here to way up here. And it has nothing to do with Mexico, and it has nothing to do with the dollar. It's, so that sucks. That sucks. But they're related. So you're like, who cares? You don't trade Turkey. Well, if you trade exotics, you care. But it can't be, well, it's never any one thing, your customer. I didn't say that. I'm talking about exotic pairs. Yeah. So Oz, isn't it crazy? Like, so they've purposely driven Turkey into the ground. So far, they've been working at ruining the Turkish economy for, I guess it must be getting close to 10 years. I have some Turkish friends. I haven't talked to them in decades, but I still consider them friends. And I feel bad. And I know lots of people that have, Americans that have moved to Turkey for like a year or two and lived in Turkey and loved it. So I feel bad that it's been unnecessarily attacked by its own leader. So, okay. The question is, why doesn't Trader's Way allow you to trade Turkish lira? There's no counterparty. The liquidity partners, see, brokers use liquidity partners. Otherwise, you're not in an interbanking system. If the broker just traded against you or matched you to their own clients, then they're not really brokering anything. They're acting as an exchange, right? Trader's Way has liquidity partners. And so if you want to trade Turkish lira, they go to their liquidity partners and find you a counterparty. Nobody is that stupid to be trading it. So like, you're like, hey, give me a Euro Turkish lira trade. Well, no one wants to take the other side of that trade because they want to do the same trade you want to do. But no one else wants to be the counterparty, so there isn't a market. Okay? Okay. So that's that. It's not Trader's Way. There isn't a market. Right? Right? There just isn't a market. Okay, you can list your Ford Pinto, right? Low miles, only burned once, and you can list it for $10,000 on eBay. And if nobody wants to buy it, there just isn't a market for a Ford Pinto. Okay. So, anyways, so that's that. Yada yada yada. Here we go. Here we go. Everything else, So you could see my rand recovered pretty quickly. Peso's doing its thing, but it got out of all the way up to the R, so I can't play it until R2 because I'm not going to trade it out of position that way. So, but my rand is fine. Everything's good. I'm going to try to tiptoe back into the peso, but that, again, I want to catch it a little higher or catch it when it's actually bearish, not guessing that it's bearish. So my trade on this one, as you guys know, I'm locked in at 15 and a half, and we're down at 14, on our way to 14 and a half. Cool, right? Cool. Cool. Nice. Great. Good. Fine. Fine. Swell. Let's take a look at, we'll do dollar pairs. Take a look at this. Let's see. Somebody I know traded it at this price. Does anyone want to guess why? Let me get rid of this. That might confuse you. That was from a different conversation. Here's the price I highlighted for you guys last week. Let's delete that. Okay, why would I buy it there? Well, first of all, my bias is up. Second of all, I'm trading this like a bottom. Third of all, it's a midpoint cycle level. Fourth of all, it kicked off of the S2, or sorry, the M2. And it's aggressive trade because the market's not bullish, but I'm playing it like it will be, or I will get knocked out. Okay? Okay, so I can throw something down like that, right? Okay. And of course, you're going to say, what's the target? Well, my target is June, but if you want a price on that, how about 140? Does that sound good? I bought it at 138.5 and I'm going for 140. So if I was just in it for a week, I'd pick up about 150 pips. All right, how would you rate that? Good, bad, no, how about grade? A, B, C, D, or F? You tell me. Well, thank you. I wouldn't rate it an A. Yeah, On says B. It's A in the sense that I traded what I had, but it's not a good trade. You see what I mean? Like, look, when the market opened, it opened here, up, down, grabbed it, gone, right? Open, up, 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 down, down, buy. Cool, nice. Okay, so I did what I did. I got what I got. I traded this as good as I possibly could, but to begin with, it's mediocre because it's not making a series of higher highs and higher lows. I bought the floor. So there's still a reasonable amount of risk on this, but I can afford it. Like, it's only, what, 40 pips right now that I have. I could just jam it because I'm scared, but, you know, I don't know. Let's give it some room. Let's decant this one. Let it breathe. It'll get better. Okay. All right, you got to let it breathe. Right? Yeah. So, like, Marina's a great pound trader, and she knows how much this one can betray you. The pound is an interesting one. Pound dollar, pound yen, pound Swissy. It can give, but it's very capable of taking away as well. It's a bit of a ruthless, and I just think because, you know, there's a lot going on with pound, right? So I don't know. It's just got its personality. So you know, I might have just as much probability of taking this to 41 as it wants to go down to 47. It might actually be about 50-50. And I get it. I get it. I get it. It's just, but I told you guys last week, if you remember, there was a line here. I told you last week, or even the week before, where's my drawing tool? I showed you that I was going to do something like this. And I highlighted this, and if you remember, it was there before when I just opened this chart. I said somewhere in here I'm going to buy it. Okay? Because look, it's supportive. I know it's a bit of a gamble. I mean, it's an educated entry risk-reward ratio justification, but the justification doesn't mean it's right. Right? It's just I can justify it. It doesn't mean I'm going to make money. So what I would say is, well, I'm going for 150 and I'm risking 40. Is that a decent ratio? Yeah, you're like, yeah. But I'm also saying that I'm already a dollar bear, and I expect 6 weeks from now we will be above 140. I just don't know if we're going to go to 135 first. That's the issue. I know what we're going to do here, I think. I know what I want to do, right? So I'm like, well, is this support? Yeah. Is this support? Yeah. Is this support? Yeah. So am I going to buy it here Sunday afternoon off of the weekly M2? Yeah. Yeah, that's what I'm going to do. And the rest is like, I can't influence it here. I just can't. But I got a pretty good trade, right? I caught it right off the weekly M2 on the Sunday afternoon. It's what I'm supposed to do, and that's that. I can kind of wash my hands of any responsibility like, hey man, I'm a swing trader. I know I want to buy it. I know I'm at support. And the market opens at M2. Like, what am I supposed to do? Not trade it? It's not my fault if it loses money. Like, my gosh, if it opened up at S1, I wouldn't have bought it. But it opened up at M2. Like, I didn't create the M2. Last week created the M2. And I'm a swing trader, so I have to buy it. So I'm like, I have to live with that. Okay? So there you go. Is it a good trade? No, not an A. But I did what I said I was going to do, and that's that. Okay. So we'll switch over here. Here's our Kiwi. This is one of the trades we know is quite weak. Okay, we had this nice move, and then we had this nice move, and then for several weeks now, we're kind of like doing this. Based on my analysis of the US dollar, I think we're going to be on our way to 75 and higher by the end of the year. So I think we're going up here. Okay. This is also a mediocre trade on this daily time frame because we have compression between the moving averages, a suggestion of actually kind of coming down here. It could come back to, excuse me, it can come back all the way to 70 before it goes up. So it's not a good trade, but we know there's something going on here. We can see it, something around 71 and a little higher. So something between 71 and 72. There's something going on where it might recover. If not, it's going to come down to 70 and then recover. So I don't really know. I know it's the third week of March, so I'm open-minded to try to twist the arm here and get this in. Of course, I don't want to lose a lot either, right? But I'm playing this like, okay, this was resistance, this was resistance, this was support. Is this one of these things? It might be. If not, I'll try again down here. So it's just like, I kind of have to do it, right? Okay, I just kind of, so if I get the right setup, I have to do it. So I wake up, I'm at my charts on Sunday. The market opens and we're here. So as a swing trader now, what am I supposed to do? A, be at my charts Sunday when the market opens, and I know I want to buy, and I know I want to buy somewhere between 72 and 71, and so I get this opportunity. See my trade here? Oh, snap. So I'm in at 71.50. See, so the market conditions are not good, but I traded I traded the strategy. I traded the plan. I was at the right place at the right time, ready, willing, and able. The market opened and I pulled the trigger. And now I'm done for the week. So what do you think of that one? mediocre to begin with. I'm buying probably the weakest currency I could possibly buy, but I am selling this USD. And I am doing so on support at the exact minute I said I would. So I don't know what's going to happen. I can lose money here. This isn't a great trade, but it's executed properly. Would you guys agree with that? I heard a quote the other day. A mediocre company with an amazing leadership team, in a situation like that, the company retains its positive reputation. But of course, the leadership team doesn't, right? So it's a perfectly executed mediocre trade. It might make money though, right? It could, right? It might. We'll look at USD Kitty Cad. No, I did not take a re-entry, but I do want to take this time to re-emphasize conversations we had last week. Remember, technically, the trade was here to here. And I reinforced that we knew that was an exit, and then look what happened. Now, people on TV might say, oh, it was this, it was that. Did you see what Jay Powell said? Oh my God, did you look at the interest rates? Oh my God, did you see this? This is an exit, and we know it. Okay? This is the first hour of the month, and all you had to do is sell, and you're done. Okay? Cool. If you missed that, then the next thing is this on the first hour of the week, you would just sell this. That's your sell zone. If you're a bear, that's by definition the sell zone. On the first hour, you just go click and you're done now for the week or for the month. Same thing, you hit your target. Maybe you have a limit order there. Down, 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 out, and you're done for March. So the next thing is, the next question is, can you survive this long enough to get the next move? But isn't it interesting? I'm trying to teach you so that you make your own decisions. Right? What do you do? Do you hold in these situations and go for the longer run? Or do you feel confident enough to take profit and you'll get back in later? What's the right choice? And what do you do in March versus May? Is it the same? Okay. So, what do you think here? I hope this was a learning experience, because that's why we're here. 5 or 6 or 10 years from now, I don't want you to think, what would Wayne do? I want you to say, I know what I do, and I always take profit here, and I'll always have a second chance. Okay. So Johnny's like, hey, I'm holding. But you know, after you see this for a while, you might change. Okay? Armin, I'm teaching people how to enter the trades. I'm teaching people how to plan the New York session. I'm teaching people how to plan for a day ahead. My point here isn't to tell you when to get out, because that's actually the hardest decision. The rest of trading, once you get some experience under your belt, and by that I don't mean years, but actually trading properly for a while, entering is quite easy. And we know when I say that, even quite easy is difficult, right? But by far, once you start to find success, by far the most challenging and ambiguous scenarios have to do with when do you take profit. So I'm not going to, purport that I always know when to get out. So I frame it as a question, like when we're down here, I ask you, what should we do? What would you do? What do you normally do? What would you like to do? Are you holding this till June, or are you going to pocket some profit? We're at the end of the quarter. A lot of people are going to pocket some profit. Okay, so Armin, so you might treat this differently than me, and I might treat this differently than Johnny. And all of those scenarios have risks and rewards, positives and negatives. The question is, the point is, you should know what you do. What does the Wayne do? Okay, I should know this. What does Armin do? Because one day somebody might ask you, and you say, "Oh, well, I have clear rules of engagement for that. I always exit." Or you say, "Well, in months of April and October, I always hold. But at the end of quarters, let's say maybe I don't hold or something," right? Like but you clearly know what you do. You know your own personality, you know your own strengths and weaknesses, right? Yeah, my alpha. So when we get here, I mean, to say, look, if you're a bear and you're here on the first hour, you sell it, or you're not a bear, or you just don't know how to trade. Like, the entry part is easy. But this is your alpha, your decision-making process. What was the point? Why are you in the trade? How long are you going to be in the trade? What kind of money are you trying to make? Like, if you're sitting here at the end of March and you got your 3% for the month, and that puts you on target for your goals, for your fund, well, shoot, you might want to bag that. Pop that 3%, especially at the end of the month. And by the way, if you only made 1% last month, 3% in January, let's say, 1% February, and now you're sitting on 5% here, okay? Right, so let's say in this month you got 5% on your trading, and it averages out so that you hit your quarterly target, you should probably do it, okay? Or typically, let's say your quarterly target's 10%. It's really somewhere between 9 and 10%. And you're like, well, I got 3, 4, 9. Should you hold it? Well, let's see. You bang out 9%. Your client says, all right, that's good. That was a nice average. And you're like, yeah, the first quarter is always modest. And they say, okay, well, good. So you made $2 million this quarter right? So we'll send you your share of $375,000. Okay? Would you take it? Would you take profit here if you know your share is $375,000 for 3 months worth of work? Yeah, you'd take the profit, right? If you got nothing to lose, you're like, well, you hold it. I mean, but we had this conversation kind of last week, right? Like, the money does change the way you behave. And it's funny to think it doesn't, but of course it does. You're like, yeah, that's a pretty good quarter. Yeah, take the money and run. Okay? Well, to get that, of course, you have 20 million, right? If you did that math, you have about 21 million under management. Okay? So think about that. Maybe your goal is to increase your assets under management, but keep your risk low. Can you think of that? You're like, wow, if I'm only doing 3% a month, but I have 21 million, right? You're going to make somewhere between 1 and 2 million a year. Or you could degenerately gamble and scare all the big game away, and you trade money for small fish, and you work for rabbits and mice, and you have to make 200% a year to make 50 grand. Or you could focus on building a track record that actually attracts money, and you increase your assets under management, and now you do 3% a month, and you're earning $100,000, right? You're earning $3,000 a day, 7 days a week, doing 3% a month. Okay. Huh? What do you want? What's your plan? So, right? So anyways, cool. So I was explaining here, at the beginning of this trade, I risked that much, and I was going for this reward. Nailed it. You're welcome. So this week, this is going to be very important, don't you think? This is the WM3. This is the daily 21. And we need to stay below both those. We're in the triangle of death. Okay? And what we're looking for, okay, is that, right, Johnny? Johnny's thinking, hey, this is a good entry. And Johnny's going for 122. Maybe 120. So Johnny says 500 more pips profit or nothing. Well, it's a different strategy. Okay. Okay. So I'm already in that. I just got to wait it out. Same thing. We can revisit this one. My entry is here. Why? Well, it's the monthly M2. My target is way up here, 80. I bought at 76 and a half. Okay. And it's profitable, but by and large has done nothing. Okay, now here's a weekly gap down a little bit, and we're stuck in this zone. And I hope we have the strength this week to rise. Yeah, but the funny thing is, Greg, your perceptions will change, and then you're like, 100 grand isn't much. Okay. Okay. So, but once you get there, Greg, you could reduce your risk and grow it again, but at less risk, and get it to 200,000 in 6 months, and then get it to 300,000 in the next year. And then maybe only grow it by, now let's say every year you turn your $300,000 account into a $400,000 account and pay yourself $100,000 and you're back to your 3. Or better yet, turn it to 500,000, pay yourself 100 and have 4. Then turn it into 600,000, pay yourself 100,000 and now you have 5. And then turn it into 700,000. So you're going out years now. You're still paying yourself 700,000, but at some point you got like $1 million in cash, and now you could do like what I said, where you can take some of that out and invest it in real estate, and still trade the same lot size on your trading account, because you're saying, well, you're taking the excess money that you have and that you could put into this account. You could trade it that way. Now that might, on paper, increase your risk, let's say, because you're trading now a lot size that's bigger than it used to be based on your account size. But the way I look at it is you're leveraging the cash by increasing your asset base, but it could be the cash that's in your account. So it's kind of like moving it out of a cash account into a savings account that pays you a higher interest rate, but that money is there. It's kind of parked, right? Real estate's not liquid, but maybe you can invest in the stock market instead, and saying, well, I don't need $400,000 in cash in my Forex account, and yet I'm trading standard lot sizes. You're like, well, I'll put 100,000 and I'll trade sort of the 1-to-1, which is pretty high, but you'll take the other stuff, park it in an account that you could access in a couple of days, let's say. It's nearly liquid. It's less liquid. It's more M2 than M1. So, but anyways, you get this M2 account, and you can say, well, I have this locked up in other income producing or asset appreciating asset classes like the stock market, but you're trading the account based on your net worth. See, most people, what they do is they put in 5 or 10,000 into their trading account, and it's all the money in the world. It's their entire net worth. So I'd never recommend that. But like, if you got some, then you could say, well, this is my trading assets, and so I can take some of the cash out, invest it somewhere else, and collect a return, and still have that sort of trading that net worth on the account. So you might be able to say turn 200,000 into 300,000 fairly easy at that old leverage of standard lots or something. Even though you went from 400,000 down to 200,000, but you got the 200,000 as part of your net worth, and you can get it back and all that kind of stuff. So it's the way that you look at risk. But I'll tell you, once you get the 100,000, you'll find a way to make that fairly normal. Okay. All of a sudden, you're like, you'll 100,000 a month will be your next goal. It's inevitable. Okay. Then when you do that, you're like 10,000 a day. All right. So that's that. So I'm still here, right? Still there, still doing my thing. Nothing really fundamentally has changed. So I'm short USD ZAR, I'm long pound dollar, I'm long Kiwi dollar, I'm long Aussie dollar, I'm short USD CAD. Anything else? Oh, euro. We didn't do euro dollar. All right. So let's do some euro dollar, huh? Anybody trading euro dollar? Take a look at this one. Okay. Let me zoom in. This one is a different type of strategy. Different type of strategy, right? So we'll take a look at this. I'm long right here. Why? What's going on through my head? Counter trend, thank you. I counter trend traded on the 8th. Part of the rules of engagement have to do with time. That's the right time and the right price. Okay, for me to be long, but is it a weekly or a monthly play? Yeah, it's monthly, right? All right, so it's a monthly counter trend. I'm right in here. And now you go to the market open, and Sunday, at exactly the market open, you're sitting on weekly M2. That's a weekly swing trade, and you'd be long right now. I didn't need to do it because I'm already in one at roughly the same price. The thing is, I can now treat this as bottom-ish, right? So I could take the lowest low of these wicks and say that's gosh darn pretty close to where I am, right? So you could start creating zones, if you will. You could say there's 3 zones, 18 and a half, 18 3/4, and basically 19, right? So there's a support zone here. And so now what we need to observe is, does the weekly plan in blue start to support the weekly plan in pink? Okay. Wait, it's not the 19th, it's the 22nd, 20th, 21st is really the entry, right? So anyways, does it trade like this? Well, the first part of that move, the right shoulder, if you will, is this M predicts this zone, and particularly this pivot here, which is a confluence of a monthly and a weekly. So you take these predictions and you put them together. If you bought here on Sunday, your target is here, 120. Now, if I bought here, the target's much different. Okay? The first one, the first target, the short-term target, is 121. The bigger target is based on April pivots. Okay. Now, April pivots are going to be compressed under these market conditions. Where were we? What I wanted to do is, I guess, yeah, okay, this is fine. So, the first target, let me redraw it. The first target is here to here, okay? My target is different. It's like here to here to here, okay? Now, technically this is bearish. So for those that are in it and you feel like you got it, you must also recognize the truth of the matter is there's nothing on this chart to support your theory, right? But you may not be trading the chart. The chart might be that right? You're choosing the bottom, you're not selling the top. And because of that, you know that you're not willing to risk much on the downside. So you're confident if it's trending up. But I'll tell you, a bear is confident to sell this. So, like, don't be afraid to break even on this sucker. But to lose 300 pips because you're stubborn is just stupid. That's not stubborn, that's stupid. That's not discipline, that's laziness. Okay? That's not a bull, that's an ostrich. And you're going to say, ostriches don't actually bury their head in the sand. I'm like, I know. It's just All right. So that's USD Rand short, pound dollar long, Kiwi dollar long, Aussie dollar long, pound dollar long, right? I don't know if I said that already. And Euro dollar long, USD CAD short. What's the theme? Right. But isn't it nice that if you looked at my trading, you would see the cohesion versus just a bunch of random trades? Make sure you're trading, right? Just look at your trades and say, do I have a clear theme with what I'm doing? Would somebody be able to understand your trading by looking at the trades? Because one day you will be judged by people analyzing what you did in your trading account. They're not going to ask you questions like, how did you feel about this? Oh, tell us again, what was your reasoning? They'll just look at it and say, pass. And you're like, why? Oh, well, it doesn't really fit our overall portfolio. So, I mean, you're never going to know. They're never going to tell you. They're like, we looked at your trading and statistically it looks random to us and we're not interested. Okay. Yeah, WTI up would be part of that theme, so we can do some commodities for sure. So let's do some oil, some gold, and some Bitcoin. How about that? Starting with, well, let's just do Bitcoin because it looks so pretty sitting here. Okay. And we are not bouncing off the levels the way we would have liked. Okay. It's not going lower, but it's not going higher. Okay. And so I believe to make this kind of look more intelligent, it should be this way. So what we're looking at is if this line holds now, this line here we marked as a 618. So if this line holds, we're on our way to 65. You're like, Wayne, that's like $10,000. Yeah, kind of depends. Not quite 55, so no, 8,000 bucks. Great, cool. So it hasn't happened yet. It hasn't come to fruition, but it could be the basis of your strategy. Okay. So that's that. We'll take a look at crude and then we'll do gold. Okay. Okay, we're above the M2, above the central pivot. It's not trending up, it's trending sideways. We already have all these marked. Okay. The cool thing is you'll see it in the pivots, right? So you see it in the pivots. So let's do this. This is the low of the month. So we'll just call this M2. Okay. Right? You average this out. This seems to be about the high of the month. We'll call that R1. Right? Now, remember, you could say M2 to R1, but the thing is, if you're a bull, you believe it's trending, so you're not going to stop at resistance, so you're going to go up to M4. Okay? So you're going to shoot up here if you're a bull. But all we know now, so that's how the pivots are calculated, by the way, if you never knew. Right now, you know, you're probably going to get something like this forever and ever and ever until it breaks. So WTI needs some good global macro again, increase in demand. Again, we're at the end of the quarter, and people or investors are rebalancing their portfolios, and some are moving, you know, from, you know, there's like moving out of tech stocks into some other stocks, you know, growth versus value, and all these decisions these guys make. They tend to make it at the end of the quarter, which is now. Last Friday was Quadruple Witching Friday. So they're making these decisions, and of course the stock market's coming down because they're taking profit. And the media saying, oh my God, it's the interest rates, it's the interest rates. No, these dudes want to get paid. Because if they take some profit, they'll put $375,000 in their bank account as their share of the profit, and then they're going to reinvest all the client money. So they're rotating out at the end of the quarter and all that kind of stuff. And when that continues, we'll get good data and blah, 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 blah. Right. The question is, we might be close to fair market value for WTI, and it goes up, it hesitates, and then we fart around here till the end of the year. That, you know, like the big rally just might be over. Right. That might be the fair market value. This one we're watching, I'm in this zone, we're watching it, and I'm not ready yet. But we're watching for the buildup, and the buildup right now would be seen as a shoulder, a crown, and a future shoulder. And you'd get something like this. Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, big pullback, big pullback, big pullback, big pull, and all of a sudden you got something going on here, and you're, oops, and you're like, okay, now you want gold. So right now, because this is a lower low, it's a dip. No, a drop. I don't want to buy a drop in gold. Okay? What I want is the higher low here, because that's a dip. I buy dips, not drops. The difference being this. It's a higher low, not a lower low. You got it? Quadruple witching, Stuart. The quick definition of, if you have a futures contract, options, so right, an options contract, or some other derivative type products. There are lots of other things out there. Okay, some, let's say, I'll just make some stuff up. Some of these investments might last a week. Some might last a month. And some last a quarter. And there's different markets for these. So like I said, futures and options and some other things like swaps and like there's swap contracts. So there's a lot of contracts, right? But if they do expire, and of course all these things expire, it's part of a contract. You can't have a contract without an expiration date. Legally, you can't have an open-end contract forever. I mean, it's not a legally binding contract. So if it does expire, it will expire on quadruple witching. Everything expires on quadruple witching. And of course, there must be 4 things, and whatever those are, is future, options, swaps, or something. Who cares? It doesn't matter. But if it does expire, people are forced to get out of those contracts. And the idea is that they buy a new contract. So the money goes from out of the old and into the new. Okay? And we call that rollover. So there you go. All right, so there's that. So we did gold, we did oil, we did Bitcoin. Good enough for the girls I go with. We did dollar pairs and stuff. We can quickly do some yen pairs. And then, I guess let me say this one thing. Okay? Let me say this one thing. Powell, I think, speaks today, tomorrow, and Wednesday. Pay attention to the theme. Okay. Let's take a look. We got a rally off of 786 on Euro Yen. That predicts a double top, so I'm going to mark that. So that says 129 to 130 and then probably back down. The only thing that would push it up is this existing trend here. Okay? But it's not going to be easy. More likely, if it gets higher, it's going to do this. It's going to hesitate. It's going to go here. It's going to hesitate. And then the fundamentals kick in and off we go. But I don't think it's a straight shot higher high. That's all. I think up, but not a higher high. So the other thing is I would wait for the dip. Okay? This is a drop. I don't like drops, but I like dips. Okay? Capiche? Okay, that's Euro Yen if you don't know. This is Aussie. Okay? This is just me explaining the similarity between the 0 lag shifted 4 21 EMA versus an 8 SMA. And you're like, wow, the 0 lag shifting moving average, you're like, that's weird and complicated. Oh, you can just use an 8 SMA. You're like, oh, that's easy. I drop an SMA and put it to 8. Done. Pretty much the same thing. And when you go to use it, it's almost exactly the same. When you're not actually using it, there's a difference. but the difference doesn't matter because you're not using it. So, okay, you're trying to measure these pullbacks. Okay, so right now we've had this drop, and what this is telling us is we are below the future 21 EMA on Aussie yen, and that might be a problem. And if it goes any lower than it is now, it's going to drop to the future 55 EMA, which then predicts all of this. You ready? This is what, if you don't see this on the moving average, then you don't see what I see. When I see something like this, I say the potential for something like this is increased exponentially. So I hope you saw all of this, the future head and shoulders pattern. When I show you this chart, you're like, oh, look at that. Ooh. It makes you emotionally erect. You're like, ooh, wow. Oh, man, if this doesn't go up soon, we're going to have an inverse head and, or we're going to have a head and shoulders. Yeah, that's what all of this says. If you missed it, you need to do your homework. All right, so that's that. Kiwi's the weakest one, so I wouldn't make a big deal of it. You had an opportunity to buy it at the S2, but if you're like, well, I don't really, I mean the M2, and you're like, well, I'm not really interested in Kiwi yen, especially below this price, and I'll say to you, okay, I get it. Again, why catch the drop when you can catch the dip? Okay. No, right now, Sangam, we're doing a course on macroeconomics, and we're covering graduate school level material, minus all the calculus. So I got enough going on the fundamental side. Okay, is this a dip or a drop? Looks like a drop. I'll pass. Okay. And what's the other thing that's in the back of our mind? Like, let's look at this. What's the other thing in the back of our mind when you see this and it's below your M2? Why do you maybe not buy this? What's in the back of your mind? Right or wrong, what's in the back of your mind here? Why do you say, well, I think I'll skip this one? Like, why did I skip all the yens? I sold the dollar off on Sunday. Why didn't I sell off the yens? Yeah, made a selling. Perfect, right? Yeah. Short-term yen strength based on seasonality and fiscal year end for Japanese companies. You're right. So I look at this and I walk. Japanese yen repatriation, fiscal year end. So I see it and I'm like, yeah, I'm not going to buy this one. But if it was April, you know, I probably would. Isn't that interesting? So I wrote a magazine article. My kids were 4 or 5 maybe, so I don't know. Well over a decade ago, I wrote an article about going from a good trader to a great trader, and the great trader knows when to skip. The trader makes one less trade. The great trader makes one less trade than a good trader. See, a good trader will make 5 winners in a row and lose the 6th. A great trader will make 5 winners in a row and skip the 6th. And you're like, well, what's the difference? Well, A, they spend less time at their charts. B, they have one less loser. But what does the one less loser add up to? Sure, you work longer because you're doing all the analysis and you're sitting and planning and stressing and thinking. And that one last trade might take 10 hours of your life, which could add up to 40 hours a month when you add it all up. But here's the thing. It might draw down your profits by 10, 20, 30%. Depending on your lot size and all that kind of stuff. So you end up working more and earning less money. And so this might be a great example of, like, in April, I probably would buy this. If it was the third week of April, I would buy it. It's the third week of March, and I'm not buying it. And knowing that one difference, where I sell the dollar versus everything, and then I go over here and I'm not selling the yen. Why not? They're highly correlated. Yeah, I understand that. I'm going to skip this one. That's the thumbs up, son. You're like, wowzer. And they've done nothing. So, cool. I'm in pound dollar making money. I skipped the pound yen and I would be losing. So now we hope Powell doesn't stir up a hornet's nest and that the macro trends continue. On the short term, a lot of nonsense can happen. So, like, I got kicked out of a dollar peso trade because of a psychopath running Turkey and him firing all, any last potential for intelligent central banking. So he's destroyed his own economy, and it negatively impacted me on the short run. Boo-hoo. So anything could happen. Powell can say something wrong, or he can say something misinterpreted, and all my trades are under threat. But the macro trend, which has nothing to do with the short run but the long run, I'm going to make money. The only thing is if I can survive today and tomorrow and the next day and every day. Every day it's about survival, but on the long run, I'm 100% certain I'm right. I just don't know if it's true. So peace on earth, may the peace be with you. May our profits be above average. Take care. Bye.